Good day to you all. Welcome to another webinar. We've got lots to talk about as always. The last webinar we pointed out the Brexit Barometer, and we're going to start with the Brexit Barometer again because remember we said that if the UK were to exit the EU, the downside risks for sterling against the euro would be all the way down to 110. And just out of interest, we've tested 110 and we're trading just at 111 at the moment as we speak. So we've seen pretty much all the downside from 130 all the way down to 110. And similarly, sterling dollar on the eve of Brexit was trading at 150 and it tested below 120 last week. It's 20% lower. And last week was certainly quite an interesting time, wasn't it? Especially Thursday night.
It absolutely was, yeah. Of course, we had the flash crash, which has obviously been covered in quite great detail. So a very, very big move, unexpected move, not something you would expect for a major currency like sterling. You know, it's one of the fourth most traded currencies in the world.
Yeah.
Now, it's important to note, of course, that this was during the Asian market, so it was overnight. So, you know, a lot less counterparties, a lot less liquidity in the market.
Yeah.
But all the same, you know, a 6% move from sort of 126 to 118. Is pretty serious stuff.
Yeah.
And of course, we've had Mark Carney has called for an inquiry into it to make sure that there was, you know, that there are proper procedures in place to avoid this kind of thing happening because it has big ramifications for business. These kind of moves,
absolutely.
You know, it can really unseat businesses' plans to see these kind of unexpected moves.
Absolutely. What do you think of down fat fingers or thin markets?
Well, I don't think you can absolutely pinpoint it on anything with absolute certainty. I think a combination of factors, you know, the fact that there is obviously so much computer-driven trading that goes on nowadays, you know, that can absolutely, that can trigger a lot of these kind of moves. Of course, we did also have comments from Francois Hollande that evening, which certainly were taken quite negatively in terms of the stance over a hard Brexit, and that of course has been a lot of the rhetoric that we're hearing.
Yes.
So you know, now that we've moved on to this stage where Article 50's been or going to be triggered in March, and of course we've heard the government stance, we're starting to hear some of the EU member states' stance. What do you think now is the outlook for sterling?
Well, certainly come down a lot, and this is due to the uncertainty. And arguably, it's acting now as a barometer around hard or soft Brexit. And Theresa May has been quite forthright in setting the date where she's going to trigger Article 50 and is talking about sort of a hard Brexit, and Hollande's joined in as well. So this is obviously given or heightens the uncertainty and puts real pressure on sterling. It's hard sometimes in situations like this to draw on any positives, but there are positives. Firstly, a more competitive currency certainly helps to rebalance the economy. So the exporters of you out there, anyone receiving euros and receiving dollars, this is good news that sterling's more competitive. Secondly, you know, the FTSE is hitting record highs. So you know, that's a good sign. And thirdly, and probably most importantly, normally it's the economic data that has an impact on the currency. And the economic data has been holding up really well. If you look at employment data, expectations for GDP, even the IMF have come out and upgraded the GDP again for this year. So there are positives out there that the economy is actually doing a little bit better than how people were expecting.
Yeah, it looks more robust, doesn't it, than a lot of even the most optimistic forecasts, I think, prior to Brexit, which is encouraging. The economy's in good shape.
In good shape, yeah. And it's amazing, you know, you get used to situations. You know, 2016 has certainly been the year of curveballs. You know, we've had Brexit was a curveball, even though it was very much 52-48. It wasn't expected that we were going to exit the EU, and I think we've got one coming up.
Yeah, absolutely. Well, I think the US presidential elections are definitely, well, I mean, if we start with the fact that, you know, Donald Trump was never expected to get the candidacy for the Republican Party, that in itself I think was a bit of a curveball. And then, of course, we've seen, you know, his actions on the stage in front of the you know, the public and against Hillary Clinton, which have all been quite interesting. And of course, it's turned a lot into really just a sort of mudslinging match almost between the two of them. But certainly, there are a number of probably similarities that you can draw between the Trump candidacy and then obviously the Brexit campaign.
Yeah, vote for change, perhaps.
definitely.
Clinton is part of the establishment, obviously, with Bill Clinton already being president. Both candidates here in the election seem to be quite weak. There are no positives. The only positive is that if Hillary Clinton does win, then it's the first lady president of the United States. That's the only positive I can draw from the whole situation.
Yeah.
So at the moment, it seems as though the market's relatively calm leading into this US presidential election.
But I think that the recent polls have obviously shifted more towards Clinton, as sort of Trump seems to almost blow his campaign up. But as we've seen with Brexit, the polls have become less reliable, arguably, these days, because typically they're surveys of people who already have made up their mind, and there's still potentially a lot of undecided voters out there. So I think it's always dangerous to rely too much on the polls and the fact that the market's moving in one particular direction. So I think it's really key when you have a big event risk like a presidential election, particularly when they're two such polarising candidates with two such different approaches to government, that it's really important to obviously manage your risk.
Yeah, absolutely. I mean, this is what we were saying in the lead up to Brexit to everyone. Don't wait for the event to happen. Don't wait for your preferred outcome. Just look to manage your risk. Look to hedge, and make sure that currency volatility doesn't impact your business. I think that's the most important message we can say. The flash crash as well. Also, just strengthens the message that even overnight we saw a move of 6% lower for sterling.
Totally out the blue.
Totally out the blue. You can't prepare for it. So let's make sure that we keep that message, keep on hedging, keep on managing a risk. And I think we're going to get together again on the eve of the presidential election. That'll be the Monday, the 7th of November. And then we'll see a little bit more, we'll have a little bit more insight by that stage about this big presidential election coming up. And we'll keep you in touch.